Welcome to episode 5 of The Coin Pod, a podcast of conversations about Bitcoin with individuals all around the world who use, study, and build Bitcoin. I'm your host, Zach Bull. This week's guest is Jeremy Stephen, a lecturer in the economics department at the University of the West Indies in Barbados. In late 2015, Jeremy and his colleague Dr. Winston Moore published research on whether Bitcoin should be an asset that the Central Bank of Barbados includes in its portfolio of international reserves. Their answer was an overwhelming yes, and today Jeremy joins me to explain why. Unfortunately, Dr. Moore was unable to join us for this Coin Pod, but you'll be sure to enjoy Jeremy's admittedly controversial opinions and important research. Without further delay, here's Jeremy. Thanks so much for coming on the show, Jeremy. I really appreciate it.
Not a problem. It's absolutely my pleasure to at least be of assistance today,
I guess I sort of want to start off with a generic question. Can you explain to me where your interest in Bitcoin came from, or where sort of the desire to conduct this research project came from?
Well, I'll treat those as two separate questions because my interest in Bitcoin came... I had a finance show on local television, on Barbadian television, some years in my mid-20s, some years ago. And the producer of the show, a much older guy who probably would have been in his early 60s by then, asked me if I knew about this thing called Bitcoin. And I had no idea what it was about. And I never spent much time. This is 2009 we're talking about, so it just had been invented. And I had no idea what was going on. I had little to no interest because I didn't spend any time looking into the particulars, including proof of work and blockchain being a more valuable thing than the token itself. I had no interest really. So a number of years would have passed. We are here now in 2012 and I am in Vancouver. And that side of Canada, as you would know by then, they were pretty buoyant and bullish about the use of blockchain technology. And I guess I caught the fever then. I bought my first Bitcoin, 100 US, from the guy I was staying with. And from then I just collected and got very much into the technology. And I started around that same time having a deeper relationship with Bit. Gabriel Abed and Oliver Gill were the only guys at that time running Bit. And they were just basically mining and looking to be a clearinghouse of sorts for Bitcoin. So they weren't doing digital dollars or anything back then, and really just being around these guys and seeing how they saw the technology. I saw value in a number of other applications. I mean, this was before Ethereum, and the most obvious application in my mind was how it could improve central banking. We have issues here when it comes to friction with money. Caribbean societies, for all intents and purposes, are not frictionless at all. We're still very much heavily cash based. Outside of Barbados, a significant number of the population within the English speaking Caribbean are pretty much unbanked. And I just saw a way or a means for frictionless small economies to thrive because there's a lack of friction. And at the time, Bitcoin offered the only real solution. I mean, when I started doing my research or coming about this idea, Litecoin was very much just a new thing, and I didn't really see a big difference between what Litecoin was offering versus Bitcoin. And Ethereum hadn't been mainstream yet, so the whole idea of proof of stake, which to me helps permission systems a lot more than proof of work. But there's the security concerns, of course. So I guess then my research became narrowed to a proof of work concept, Bitcoin mainly, helping a central bank, for instance, deal with one of its more interesting problems. Here in the Caribbean, we are very much concerned about the foreign exchange reserves that central banks hold, simply because our economies are vulnerable and we are net importers, right? So we import more than we export, most of us. And as a result, because our currencies aren't highly tradable, we are always very concerned about how much US dollars we have at the central bank as a means of a last resort, and pounds and euros and whatnot. And I thought to myself, well, you know what, if it is that we're looking at a frictionless economy, possibly you probably may need to start putting some crypto up in there some cryptocurrencies up in there as a means of helping reduce trade friction. So that is where the grounds of the research came on. And I asked Winston, being one of our top econometricians across the entire Caribbean, and also being my boss at the University of the West Indies, because he is a lecturer. I am a lecturer in banking and finance and economics. Well, somewhat economics and some technology stuff at the University of the West Indies Cape Hill campus in Barbados. And Winston is the head of the department and also one of our top econometricians. And Winston was always interested in the idea but not committed. So in other words, he would have never bought Bitcoin, but he was always interested in the mechanics and the technology underlying blockchain systems. And I needed him to do some modeling for me. I could have done it myself, but I wanted to turn out the paper very quickly, and it made sense to let a paper be the sum of all parts if you've got somebody that can do it way quicker. And we found out, well, you know what? Yes, Bitcoin had proven between 2009 and when the paper was, when we submitted the paper for review at the Central Bank annual review seminar in 2016. So May 2016, we found out that there was a lot of volatility as expected. It's a thinly traded commodity and pretty much subjected to the whims of large owners of the miners and also large owners of crypto. The market wasn't too fair or flat. So they had few people, of course, owning lots of Bitcoin and some retail persons coming in, generally curious and whatnot. So they would pay whatever price and they would get shaky because they did not understand the technology. So they would look at exiting the market at unreasonable prices as well, as far as we were concerned. So given that condition, or those conditions, how would a central bank who prides itself, or all central banks should really do this, being the lender of last resort, they should always focus on stability in their actions, stability in the wider macro economy, and all of that. So how do you, by inviting them or trying to entice them to invest in what at the time we considered to be a risky asset, focusing on the word asset. And Winston ran some simulations and we found out, well, yeah, once the central bank converts less than, the numbers are a little foggy in my head right now, but say between less than 2 and 1% of their reserves into Bitcoin, man, they could make money. And he thought, well, that may be compelling for Barbados more so than the other Eastern Caribbean central banks, simply because our central bank has been a loss leader for up to that point 5 years because they were basically doing too much government financing at reduced yields for a number of reasons. Our macroeconomy in Barbados hasn't been performing well for the last 7 or 8 years. We are going through a lost decade like Japan. So he thought that at least if we centered on that point, that there's an ability for the central bank to actually turn a small profit if they invested a small part of their portfolio. Not only into crypto, but not only does it present that profit-making ability or an ability to stabilize your revenues and therefore help you further, if you wish to, finance government, which is unsustainable, but through the use of treasuries, buying treasuries and whatnot, open market operations. But, you also can go about replacing the use of the real-time gross settlement system, which in an economy where there's only 300,000 people, there are only 4 or 5 commercial banks that on a daily basis probably use the RTGS twice or 3 times a day, if so much, if you see where I'm coming from. And the central bank is where the RTGS is basically stored there and they're linked into SWIFT. It's crazy. It's crazy. It presents, there's no economies of scale. And at the time, the mining costs were so small in Bitcoin, it just made sense for us to think, well, why not just probably in the near future use a system similar to RS Coin that's being proposed in England, but RS Coin was not even written about just yet. We Winston and I, being not the more technologically savvy at that point, and probably more so I am, we did not know about the idea of a permission system, else we would have probably expanded a bit more on the paper to say, well, look, let's explore permission systems and how they help frictionless transactions. But we stuck on one selling point, because the main thing was to cause not just a bit of controversy, but to get people thinking that blockchain technologies could alleviate one of our biggest issues right now, which is shortage of foreign exchange and profit making ability, or at least stable revenues for a central bank.
You mentioned something very interesting, the fact that your first impression about Bitcoin was its potential to serve as a reserve asset in the portfolio of a central bank, which is in the general narrative about Bitcoin today becoming increasingly popular. But I guess back in 2009, 10, 11, even 12 and 13, the conception of Bitcoin was very much as a currency and a cash, a cryptographic cash payment system. Um, so, given the way the narrative has changed towards the view that you originally took, do you subscribe to the idea that Bitcoin is sort of cryptographic gold or a replacement for gold?
Um, all right, let me put it this way. So, when I first started teaching, because I do a lot of public speaking across the region, and ironically in North America about cryptocurrencies and whatnot, and up to a year or so ago, I would say probably just under 11 months ago, I would always make the reference to gold as Bitcoin being a form of cryptographic gold. But you know what? I've had to reevaluate that statement of late, and a lot of it comes down to the fact that clearly gold prices, it's hard for gold prices to be as manipulated as Bitcoin's prices over the last few months. I must admit, there's such a measure of control in the gold market in terms of even if there's massive supply, there's such an oligopoly that seems to be a little more rational with how they set the pricing and how they make available gold to the market. So therefore, gold prices aren't volatile simply because there's such a sophisticated system of distribution. And that's one of the major differences because, of course, you're thinking about decentralization when you're speaking about Bitcoin and proof of work systems like Bitcoin that have no permission centers or nothing like that. You're thinking about that. So therefore, you would expect volatility going forward, volatility in asset value, and you could also expect overbuying. And then the fact too that with proof of work, uh, the fact that mining becomes more computationally expensive, the more nodes that join the network and the more Bitcoin in circulation, uh, and the fact that it's a finite resource. Yes, gold is finite, but it doesn't get more difficult to mine gold as you're nearing the nth unit of gold. If you see where I'm coming from, so there's right. So there's certain subtle differences that really ensure that the price of Bitcoin has no ceiling, but they don't. But in that same way, it doesn't have a floor. Whereas with gold, there is a ceiling because there's a finite resource. We all know there must be a finite resource unless we find some way to duplicate gold perfectly in the lab. And there's a floor simply on the grounds that there's such a controlled way of distributing gold. So case in point, you go and buy some coins in Singapore, some gold coins, some Canadian maple leaves for argument's sake, you'll be stupid to rip that plastic. You no longer have anything as worth it. But say, for instance, you could recover, if you've got your private keys, you can recover access to your, well, the system, the blockchain, and your gold, your digital gold or your cryptographic gold is as good as new. So there's no spoilage when it comes to Bitcoin as well. So for me, there's certain advantages, but then if I look at it from a monetary economist point of view, then there are also other reasons, more so negative than positive, against Bitcoin being compared to gold. In fact, again, that there's no control over pricing. There's no authority that truly gives it a value based on, I guess, macroeconomic fundamentals. Bitcoin, because of its size simply, and the fact that there's so much friction, now I can say this freely, there's a lot of friction just in the proof of work model alone, makes it difficult to price it based on macroeconomic fundamentals. It's a small proportion of global trade. So, for instance, we all know the stock market crashed, and then world markets have been pretty much stuttering since then. And I thought about it. I said, well, okay, this is interesting. The fundamentals behind this are based on, well, a lot of earnings in the States were underperforming, so Apple didn't do as well as they could have. They made money still. Amazon didn't do well. The biggest players in the market didn't do well. And then, generally people have been looking for this hard landing because assets were overvalued for a long time, very expensive PTE ratios. Yeah, you know what I'm talking about, and I'm hopeful that your listeners are very acquainted with what I'm speaking about. And then, of course, nobody knows when the tax cuts will really take true effect and show up on the corporate balance sheet. So people just got shaky and they moved out. They behaved for a moment like cryptographic markets, right? And there's a student, yeah, but a student, yeah, 'cause it was a pretty irrational drop, you know. It was pretty irrational. It was baseless, really. And the Fed has been signaling for a long time, signaling for a very long time they wanted to raise interest rates, even though the chairman is changing or has changed already. So they behave pretty much like what caused Bitcoin to go up to $20,000 from $7,000 in October thereabouts last year. It was crazy. But anyways, here's my point. The the thing is, one of my students, because I teach very openly, although it's not part of my syllabus, I teach very openly about cryptocurrencies at the school because I don't think anybody under the age of 25 should not be involved in it in any way. I think they should be actively involved, right? I really believe that. So, for a number of reasons. And the student got this weird idea to ask me, well, yeah, Jeremy, because they call me by my first name. Jeremy, I think there's a correlation between what's happening to the price of Bitcoin and all cryptocurrencies right now and what happened on the stock market. And they said, but right, at best, the market cap for cryptocurrencies is hundreds of billions of dollars. And you know that global stocks are in trillions. How could they be correlated? Is a microcosm. So one is a microcosm of the other. So I say to people, it's very tough to make it's very tough to compare like the rationale behind what's going on one market and the other. So for me, Bitcoin being digital gold or cryptographic gold, the gold market is worth trillions of dollars as well too, simply because it's easily convertible, and it is hard to make that comparison now. But I would admit to your audience, because I wouldn't want to tell a lie. I would use it as an explanation going forward, and then there are other mathematical reasons as well too. But I wouldn't want to get into the math lest I want to expose myself to some cryptographer who eat me for lunch. I'll stick to the economic side, you know.
You mentioned that the fact that unlike gold, Bitcoin doesn't have a central party that regulates it or has a significant or outsized position in controlling the market. For example, like central banks who hold gold reserves do. And in fact, whether or not central banks should at all get involved in Bitcoin is very much a controversial issue, or has become a controversial issue over the past couple of years because of centralization concerns, where a central bank buys a lot of Bitcoin, holds it, and then can, in some minds, easily manipulate the Bitcoin market. But at the same time, Bitcoin is very appealing because no one, ostensibly, theoretically, no one has significant control over the market. It's, in theory, a very decentralized currency in both its technical application and its distribution. Do you see a likely future where if central banks get involved and start buying Bitcoin, add it to their foreign reserve portfolio, they could manipulate the Bitcoin market similar to how we've seen the gold market similarly manipulated in the past?
Yeah, I mean, I did say earlier that the prices of gold are stable, but that's over the long term. But there are instances of manipulation. In fact, as far as I'm concerned, any asset, once there's a market and you've got enough people who work in unison, form the little oligopolies, or they have the capital, will try to manipulate asset prices. That's just the sad part about markets. A price is nothing more than just a guess, a guess of what demand and supply is. So, with that in mind, I think probably, given the cost of mining now, there's less, and the fact that, well, it's mainstream and there's a strong community in Bitcoin, a very strong community, that there's less of an incentive for a central bank, larger central banks such as those you would find in the developed world, to really be involved. There's no, all right, so in other words, there's no real friction, say for instance, in Sweden. It's a cashless society. So in theory, there's no friction. So therefore, that compelling benefit that probably Bitcoin had a year or so ago before mining costs went through the roof. Um, wouldn't really appeal to their central bank. And likewise, England, they're moving towards full cashlessness very soon. That wouldn't necessarily appeal. So what appeals more to them is control over the monetary system, and also by extension the wider economy, control over inflation. These factors are what central banks concern themselves with. So if it is that the price of Bitcoin, there's a correlation between mining costs and the price of Bitcoin. The higher the price goes, the more transactions or requests for transactions occur, the more blockage you get on the system. The system becomes a bottleneck, takes longer to mine, becomes more expensive to mine. So my thinking is that a larger central bank will probably see that as being a bigger cost than it's worth, and probably will try another system, a la Ripple, for instance, or even what's the name of the other one? Lumen, Stellar Lumen, something like that. That offers a bit of control and ability to offer permission blockchains or something. And that I find a bit more compelling for a central bank, especially if they are offering an RTGS for their commercial banks within their country. So, but here in the Caribbean, I think although mining costs are relatively high, there's more of a compelling reason for central banks to be involved, simply for the fact that they can't afford to invest in a blockchain, right? But if it is that they wanted a sense of control and wanted to issue more digital dollars, then if it's not Bitcoin, then something close to Bitcoin. If it is that they can find a system like Bitcoin where they can actually participate, they might not be able to mine, but they can regulate a little more and at least monitor transactions a lot more effectively. But better yet is that they should probably just start their own permission system, invest in a permission system, and focus more on on frictionless transactions or facilitating frictionless transactions, because our economies are very vulnerable. It's a hurricane ravaged region. You want to be able to move quickly on trade so you can recover. You want to be able to not wait months to clear some large insurance payout. Say if a hurricane, God forbid, comes and knocks over Barbados, for argument's sake. You want to be able to move quickly. I don't think, however, that a small central bank such as the ones that you get in the developing world would want to manipulate the Bitcoin market, although as it stands right now in terms of market capitalization, that these markets are small relative to global currency markets. My thinking has always been that the only way a central bank can manipulate global affairs, and I'm going to leave the United States out of it, because they do, simply by just signaling that interest rates can go higher in the States, causes stock markets to behave the way they do. But other central banks don't have that influence. So I think the only way a central bank really manipulates anything is in the foreign currency market, and then that filters into the system over time. So the Bank of England could decide to be involved in more open market operations, decide to sell more treasuries, and then flood the market with pounds, and therefore cause the value of the pound to fall. Something like that. But that doesn't really translate into how the U.S. economy would perform generally. And funnily enough, it doesn't affect Germany, but it may affect Spain. So I think it depends very much on the size of the bank, whether they would want to engage in cryptocurrencies altogether or do a permission system in the future, which would be cheaper. And by then there's less of an incentive to manipulate anything because you're focusing on transactive power. Or when it comes to smaller central banks in the developing world, I think there's no incentive at all to manipulate the Bitcoin markets or the market for any cryptocurrency. There's more of an emphasis on said transactive power because you want to create frictionless markets to help this economy. And there's research done, since my research, there's been research done by the ECCB, that's the Eastern Caribbean Central Bank, or at least they've given advisories, and the governor there has made speeches along the lines of that being what I said, the frictionless economy being, or frictionless transactions being more compelling for them. But larger central banks, nah. I think given the high cost of trade, given the price of Bitcoin as it stands, given the fact that it's not centralized to begin with, I don't think they would want to manipulate it unless there's some political motivation to shut down or undermine that market, And I really would like to be a little more positive, and this is me personally, with respect to how with respect to how they view it, and probably they should want to focus more on regulation or providing the means through which you can regulate. Singapore does that. Their monetary authority, and they're basically researching a system that perfectly mirrors what a central bank in a large developed economy would want. And I figure most central banks will follow that instead of wanting to manipulate digital gold or cryptographic gold markets.
Sure, sure. I guess I'm curious if you foresee a future where central banks, because we've already seen some countries like Estonia and Russia and Venezuela, although I guess Venezuela is more of a debt offering. But that aside, where these countries are creating permissioned blockchains or at least centralized cryptocurrencies, whether or not they're on their separate blockchain, I'm not entirely sure. But do you foresee a future where governments increasingly build these permissioned blockchains and centrally issued cryptocurrencies, and maybe even back them with Bitcoin or some decentralized currency, and sort of, I guess, usher us into a cryptocurrency world where instead of paper fiat pegged to gold, we have permissioned blockchains or permissioned essentially issued cryptocurrencies pegged to Bitcoin or something like that? Do you see that as a potential scenario or reality we could see?
I think a small country whose economy is in shambles right now, not even, although ours is very, very shaky right now, I don't think I see a near future where a central bank governor, given the ideology we have in the Caribbean, and I'm going to start there first because home drums beat first. I really don't see an ideology, at least within my working lifetime. It may very well happen where you want to peg to a decentralized system, because again that takes away one of the controls that a central bank has. No, for instance, why do you peg yourself to a foreign currency? We here in Barbados, our dollar is pegged to Barbados dollars to $1 and has been so since the early 1970s, right? So and Barbadians swear by this peg, irrationally so too, to a point. No, from the time your children were taught 2 to 1. Trust me, you say this in school. It's almost like China. It's almost like China, right? Where people are saying these things over, saying certain mantras over and over in class, in these Japanese schools, and that you see sometimes on TV and anime. Yeah, my views are very warped, but this we believe in this thing, and the reason why is that we trust that the U.S. economy will always be all powerful. That's the only reason why. Else you would want a basket of currencies like Singapore. Like what Singapore does. They hedge. We don't. We believe somehow the US is all powerful, and also because it's our closest, well, this is a bit of a misnomer, but it's one of our closest trading partners by volume and distance. Although one could argue that Brazil, though a smaller economy, the bulk of its economic activity is closer to us, but we don't trade with Brazil as often. So there are those reasons. Now, to translate that to a central bank allowing its currency to be pegged to a decentralized system, it must present two opportunities. It must present, or two scenarios really. It must present a form of stability. In other words, we know that there will be always some interoperability of the systems. In other words, people must always, in some form or fashion, be willing to swap out of a Barbados digital dollar for Bitcoin, and also it should come the other way. We should always have Bitcoin coming into the system or onto our private keys, or being linked to our private keys, that we can always issue Barbadian digital dollars coming out of it. So if for instance the trade is very much unilateral, that is out of Barbados, and then it makes the value of the Barbados digital dollar over time be worth less than what the central bank might be pegging it for against Bitcoin. Then the next thing is just assume, for instance, over the next 5 years that the price becomes volatile, since, I don't know, for some reason the price of Bitcoin stays between 7,000 where it is now, and say rationally in 3 years $30,000 rationally. Although I don't believe that's rational, just for argument's sake. Then that is such a huge swing in value that compounds now the issues that I highlighted with respect to unilateral trade. The fact that that whoever is accepting Bitcoin outside of the Barbadian economy or within the Barbadian economy might decide to hold it, and you have too much Barbados dollars in circulation, then you have the volatility issue. It means that not only implicitly is the value of your Barbados digital dollar reduced, But then suppose you want to switch back out into Bitcoin, or buy something that is only being accepted in Bitcoin outside of Barbados, for argument's sake. Then you have problems. So for me, smaller central banks wouldn't necessarily peg themselves to a decentralized system. I can see them pegging themselves to a permission system. I can see them pegging themselves to a centralized blockchain, especially one that has a central bank rules, ones that has, let's even go a little more complex, one that has smart contracts that are pretty much governed or overseen by central banks. I can see that happening simply because it offers what central banks crave most, stability. So I don't see that happening, but I do see larger economies now to get to larger economies, exploring the use of permission systems, probably even more so than centralized blockchains. Permission systems are a great incentive for private sector actors to integrate their systems, excuse me, with central banks. No commercial bank wants a central bank to dominate the flow of cash at all times. There's certain volumes of transactions that, as far as people are concerned, don't need central bank involvement. It slows down the speed of transactions. It makes the cost of those transactions higher than they should be. So I don't really see a fully centralized system, say with a central bank being the main node, or offering master contracts exclusively and shell contracts managed by them exclusively, but then leased or say seconded to seconded to commercial banks. I don't see that happening because it would bring up the whole argument of, well, this is still too costly. But permission systems, although it takes away a measure of control from central banks, I mean, blockchains are all about transparency, right? So as far as I'm concerned, that transparency, what you give up in transparency, pretty much is not as much as what you would give up when it comes to increased costs of being part of a fully centralized system. So I think permission blockchains are where they should go. I honestly think so. Yeah.
Well, I appreciate all of that, Jeremy. I can't thank you enough for coming on the show. We're sort of reaching our time limit here, but I do have one final question I want to ask you, not necessarily related to your research, but given that you say you lecture about, or you at least incorporate Bitcoin, mention it in your lectures somewhat frequently at the university, and I'm sure you have, especially today, just dozens of university students asking you, Jeremy, should I buy Bitcoin right now? What's your answer to students who ask you, should I buy Bitcoin?
Man, look, I find investing in liquid markets, because Bitcoin is a relatively illiquid market, a fascinating thing. It is so easy to call. It is so easy to call, especially if you can get a look at order books. It's so easy to call. So what happens is that I teach a course in portfolio management. Normally, the second semester, which we are in now, has a larger cohort than the first semester. It typically does. So last semester, I had about 10 students in that class. Again, it's a small country, small-ish university. You get small classes sometimes. My classes in the second semester go up near to probably 80 students or so, or 100 sometimes. Yeah, which is big, right? So it really moves. So last semester, I was encouraging that same class to buy Bitcoin when it was around $7,000, and simply due to the fact that the hype train was on full, and I wanted to teach them about active investing and trend investing. And I said, well, look, there's no better way for them to learn this in a short period of time than through buying Bitcoin, because right now all signals are pointing up. Although I grade them on how they manage their conventional portfolios, all signals are pointing towards, and I really thought it would have capped out at $13,000 at best, or 10. All signals were pointing that way, and people were buying into this hype. And you heard stories out of the US, for instance, of people refinancing their mortgages and stuff just to buy homes. And I'm thinking, and taking out home equity. And I thought, well, whoa, this is the way just before the dot-com bubble and the financial crisis there in 2007. I mean, these conditions are ripe for some quick money. So I told them, I want you guys to see what trend investing is all about, but also I want you to feel the pain of volatility. I want you to see Bitcoin fall, but have faith in the numbers. Eventually, the system will self-correct. in a positive manner or negative. So Bitcoin had fallen to about $5,000 after I sold them, because I sold them myself to Bitcoin, and I took it at $7,000 a piece. So they gave me how much they could afford, and I would give them some Satoshis, whatever the case may be. And I told them, sit on it, sweat it out a bit, but you will make money. And they had faith. Now, this semester, I can't do that. If you follow exactly where I'm going with respect to whether you should hold Bitcoin or not, no. I literally, in all good faith, cannot walk up to my students and say, yeah, you know what? It's time to buy is no. Now, I like to buy low, sell high. But I still think there's too much irrationality going on because people are overreacting to regulators. All right, because for instance, the slide stopped. This recent slide stopped in the pricing when the SEC gave a very vague statement that was neither in support or against cryptocurrencies at all. And then there was a recognition that utility tokens should be treated as securities. So that alone stopped the sliding. But yet China ever so often gives these thinly veiled threats against Bitcoin and South Korea. We know that's where the larger or the bulk of trade happens, right? So yes, people overreacted, but I don't think that it justified the $7,000 $7,000 drop that we saw recently for Bitcoin. So, but with that being said, the markets are still highly irrational, and I really haven't seen signals that say, well, look, can persons who refinance their homes, for argument's sake, in the States, because I don't think that happened here, but I wouldn't be surprised because a lot of people jumped on that gravy train late last year, and I was warning people publicly, after 10 grand, it really doesn't make much sense for people to jump in because you won't know which way is up. Because I do have a lot of visibility publicly as well here in Barbados as a social commentator, so I put out a public statement. Only person that did it is saying, well, look, enjoy the ride if you got in under 10 grand, but if you got in over 10 grand, near 13 grand, you're really playing with fire. So, what was I saying? So, right. So, I am, however, very, very hesitant to tell my students to get in now, because the fundamentals, if there are any fundamentals in pricing, are not clear to me which way is up. Some may say, well, this is a good time then, but no. Remember, I told you that there's really no floor nor a ceiling to Bitcoin. So therefore, it's as if you're taking out short positions and you really don't know, you're not taking out any hedge, you're not taking out any long positions to hedge it and to limit your losses. There's no real way to limit. If there were options, a lot more options, as a derivative, Bitcoin derivatives in wide circulation, I would tell people, well, shucks, if you got access to those options, play this game. Play it, hedge it, take out some put options and whatnot and call it a day. And hedge your losses. But as far as I'm concerned, that isn't widely accessible to most retail investors in the same space. So I am, long story being short, I just wanted to give you the meat of the material. I'm telling people probably at this time it may make more sense to look at the alts, and more so at the alts that deal with more than transferring value. So for instance, although Ethereum is taking a beating, I am big on the future of Ethereum. I am big on Cardano. I'm big on any system that's looking at more than transferring value. Right? It's more than that. I'm looking at I like proof of stake, but it has its security concerns. But I like the transfer of information. So platforms, anything that presents a blockchain as a platform for the exchange of information, a new form of internet, catches my eye first. And then any of the novelty products that come out of it, the what I call the Ethereum derivatives, the golems of this world, and the salts of this world and whatnot. I like salt as an idea, but my students got into salt last semester after I told them about it. I haven't touched it. They enjoyed a bit of an increase. I haven't. But I'm saying those are where my eyes are. And with Bitcoin, for now, it's probably a case of wait till all this regulatory panic or regulatory induced panic is over for the while and then make your call. But the price should go back up just on the novelty of it and the fact that there's a strong community that backs it.
Did the Barbadian central bankers bite at all when they saw your research? Did they show any interest in the potential profit?
Yeah, they bit indeed, and I don't mean indeed as in I as the word indeed, but in space deed, meaning they bit but they haven't followed through. So they form, uh, basically, the idea has faced death by committee. If we in Barbados don't get our act together, Bermuda would be the first. We consider them Caribbean, but they're really not because they're so far north it gets cold up there. So, but culturally, they link to us. So, Bermuda might very well be the first Caribbean country, if you wish to call it so, that has a permission system, a fully integrated permission system or something in about 2-3 years working with BIT. And of course, BIT is going to charge. The Barbadian Central Bank, I would be surprised if they can get this stuff done free for a company that could have installed it 3 years ago. So I really don't know how soon we'll get our act together. I really don't know.
Well, Jeremy, like I said, I can't thank you enough for coming on the show today and sharing your opinions and insights on Bitcoin and other cryptocurrencies, as well as explaining your research to us. Thank you so much again. It's been a pleasure having you.
Cheers, man. Thank you for having me, Zach.
This CoinPod has been a production of You, Me, and BTC. Special thanks to my colleagues Tim Baker and Daniel Brown, and of course to my guest, Jeremy Stephen. To learn more about the CoinPod and catch up on previous episodes, visit thecoinpod.com and follow the show on Twitter @thecoinpod. Be sure to listen next week when we'll be back with another quality conversation about Bitcoin. Until then, cheers.